I hope you folks are having a fantastic Monday. Welcome to the Short Vol Show Live. My name is David Lincoln, and let's just jump into it, as someone else once said. And the good news today is we are making money, which is very important to the health of our whole situation here, and I'm happy about that. We can see that the market is up a little. Well, let's take a look. E-mini's up 7 currently, and the VIX down 31. And you could see futures were down even with the VIX up a little bit today. So they're kind of doing what we thought they would do as far as, from the shape of the term structure. It has kind of come in a little bit. Let's go to the term structure now as I pull up VIX Central. And we can see that the distance between spot and the front month future has decreased to a point in 80. What is that? 83 cents. 183 between spot and the front month future, and that's kind of coming into line of what we normally see. But what that means is that future has fallen towards spot, and thus UVXY has gone lower, which we like being short UVXY. I've added in the chat stream here, so if I type something into the chat, it should appear now on the screen there we go, for people who are watching this on YouTube now. I know it's kind of confusing if you watch the last thing because there's a chat going on, but you couldn't see what people were saying. But now you can see what people are saying in chat, so that's good. I'm slowly coming into like this century and learning how to use this whole interface here, which is quite it's quite confusing. Well, not confusing, but for like an old timer who isn't like a 10-year-old kid, it's kind of hard to figure out for me. Let's put it that way. And let's see. I'm trying to adjust it on the fly right now. Let's see if I can do it, because it looks like when you chat now, it only stays up there for a second and then it's gone. But that's fine. At least it's staying up there at all, so we'll take it. So let's see if I can fix that. Appearance, no. Mod tools, no. Stream, no. Output. It looks like I'll just have to figure it out once I get offline. But anyways, at least the chat is up there for a little bit, so you can see it for a second or two if you are watching this in the rebroadcast. So we'll fix that later. No biggie from this end. All right, so the position is making money because UVXY is currently down 67 cents. To refresh you on our position here, we basically have a big condor on, which is a fancy way of saying that we have set a spot where we want UVXY to end up on November expiration of between 18 and 24. So right now UVXY is 24.66, and all of the things that conspire to make it go lower should reasonably make it go down another 66 cents, but not down too much to get down below 18 to keep us within our target range for that time period, which is 53 days from now in November expiration. We have seen the market kind of stabilize. It was up all at the session. I don't know if everybody is aware of this, but the market stops trading over the weekend, and then it restarts trading again about 6 p.m. Sunday night. And 6 p.m. Last Sunday, we had the market up. E-minis were up like 10. And the market stayed up until, I think it was like 3 in the morning or something when it sold off. Let's go to the chart here so refresh our memory here a little bit. Yeah, 21. Okay, so if we back this chart out here, we can see, yeah, it was like 5 in the morning was the low. I'm kind of in the way of it. Let me get out of the way for a second here. 5 in the morning was the low, and then we kind of rallied back up, sold back down, moving all over the place. But now we are currently back up 7, And the VIX currently down 30 cents, trading just around 15. Well, not trading because it doesn't trade, but printing around 15. And the term structure is still looking very healthy. There was definitely some blood in the water with Roku lately. With that announcement that I believe Comcast was announced a similar streaming service to Roku, and that caught the market by surprise. So we saw this big sell-off in Roku. We saw a big rally, and then it gave back everything that it had accumulated during the rally. Let me see if I can get to it. Here's a 180-day of Roku, but you can see it from July 29th, that big move up, and then boom, right back down again in Roku, which once again caught some people by surprise, which was a bummer. So we're kind of just straightforward ahead now in the VIX and UVXY. I've kind of added to the position. If we actually just pull up the position here, if we go to UVXY, I've basically just added to the condor. If I get out of the way here, you can see exactly the position down here in the fine print. I'm long 28 of the 28-24 put spreads. I'm short 36 of the 18-15 put spreads. Now remember, the 24-28 put spread is $4 wide, whereas the 18-51 is $3 wide, and thus the ratio there. And then I was short the front week 23-26 call spread. I did roll that out a week because it didn't seem likely that we were going to get below 23 this week, although we might. We never know. But did roll that out a week to give us a little more time on that one. And so that's kind of where we stand right now. UVXY down 67 cents. It's a good day for UVXY. We'll see where we go from there. VVIX down nicely. Not a whole lot. This is one of those days between where not a whole lot's happening in the VIX, but we like it because we got a little decay in UVXY, and we're just right on target here. So once again, the term structure has kind of normalized more in that there's not so much of a width between things, but we do see contango up to 7.46% here in the front two. That's between the ACK and no future, which is all we really care about with UVXY, because those are the two futures involved with the rebalance in UVXY. If we do go to the ProShares website, we can see what the current holdings are for UVXY, that being, let me make sure this is refreshed here. And these are, of course, as of the 20th. They always show you like the day before. And we can see, mostly it's October futures, 42,000 October futures, $725 million worth of October futures. And November futures, $136 million worth. So those are going to roll every day. And we like them rolling in contango because that means that UVXY is decaying at all times. If we go to the UVXY chart here, we can see we did take out the all-time lows last week, but a little bit off of that right now. If we close up, let's go to like the 5-day here. We see that pop Friday, big pop, but we are kind of fading back down from that now. And if we kind of compare this to the what if we have some fun here? Let's see if we can overlay the VIX to this right now. So if we have this, we go to studies, add study, and we're going to go compare with, we're going to do the VIX. We can see that, now look here, this is like how, it's just lag in the VIX. If VIX pops, this thing doesn't really pop that much. Same here, VIX pops, doesn't really pop that much. And we can see, this kind of just fading lower here compared with the VIX. The VIX being that purple line. And, if we compare, I was just trying to kind of compare where you can't really see the decay in UVXY over just like a couple days like this. It's almost too short of a time period to really latch on to that decay. Maybe if we back this up to like a year. Well, it's hard because it doesn't really center the VIX, right? But I think a better one to actually show the decay would be to look at UVXY versus well, if you look at UVXY versus VXX, then you're going to see you're going to see just the decay from beta drift. What if we let's just add in VXX here and see what that looks like. Add study, compare with, and I think like which one you put first on here is going to kind of determine things a little bit, but let's just put VXX in here and see what it looks like. All right, so yeah, where you can see UVXY straying from VXX, that's like going to be the beta drift kicking in there. Yeah, I think it kind of like what order you show these in kind of matters. But either way, we got that low of 2302. We took out the all-time low, and that was for me, I kind of covered my short when we took out the all-time low. Not that you want to necessarily going to do that every time, but I just thought it was a good time to kind of do that. But we've got this big condor on, and I guess my question to the viewer is, do we keep the big condor on, or do we maybe switch back now to just that bullseye thing? Maybe we switch the position to just having like short 2 calls in the front week, or maybe the AUK. What if we were to switch the position to selling 2 AUK 25 calls? So sell them at 154 or something, and that's your whole position. You collect $300 by AUK expiration if it works out, and that's it. Keep it much simpler than having this big condor can work out nicely and can make you a bunch of money over the period of the next 53 days. But maybe this bullseye thing is simpler. We're kind of, you could say that we're in a sort of a mid-ish range now. I mean, we're off the lows a little bit. We've popped a little bit. And it might be time to just, put that bullseye on and leave it on for a while and just keep rolling it out every week. It certainly is a simpler thing that you just kind of set and forget. We had that nice rundown being long the put spread, but now we've got this condor on, and it's tough to judge where it's going to land in the middle. The problem with condors is that you're never happy. If it starts going down, then you're like, oh, careful, don't go down too much. And if it starts going up, you're like, it's going up too much. You can never really root for it with a condor. You just kind of got to leave it. And every increment it moves one way or the other is like not good, it seems like. Well, I guess every increment off the midpoint. So if we've got a condor where it's 1824 or is the like zone, so like anything off of 21, if it's above 21, you're like, whoa, don't go any higher. If it's anything lower than 21, you're like, whoa, don't go lower. And that's just kind of the nature of the beast with a condor. But I like the position for now. Let's leave it on. Every time we change position, especially in UVXY, of course, every time we change position, we're either going to have to try to leg it and be really sneaky with the way we leg out of it, or it's going to cost us edge to change things. That's why I've been trying, typically in the past, I've been just messing with this stuff too much, like messing with the position, doing trades every day, switching it around back and forth. And that's, interesting for the viewer, but that's not best for the P&L. With options trades, at least the kind of stuff I do, it's better just to set it and forget it and leave it for a while and let it work. Because, I'm one of the only ones, if we look at the volume and open interest in this November stuff, there's not that many people trading it, right? I mean, look at the open interest here. The 15 puts have traded 7 today. That was probably all me. 18 puts have traded 14. This doesn't have a lot of volume, which means when you try to get in and out of it, you're probably not going to get that great of a fill unless you get lucky. I do want to pull up what trades I've done today, and we can just go through those really quickly. I did sell more of those downside put spreads at 54 cents. And it's weird. Look, when you look down here, it says maintenance call $1,300. Now, if I look at any of my other screens from Thinkorswim, it doesn't have that, and it doesn't make sense to me why I would have that because I don't have any naked options. Everything is covered, and there's enough money in the account to cover everything, like every worst case scenario. So I don't know where that comes from. I think it just comes from like it marks the position. Like when you buy and sell stuff interday, it kind of marks the position kind of weird. But I'm not going to worry about it because nobody's tapped me on the shoulder or gave me a call about it. It just doesn't make a lot of sense why that would be there. And I think it's some sort of anomaly of this, of the additional margin requirements. When they plug the additional margin requirements for trading UVXY into Thinkorswim, I think it just kind of pops up there. At least that's my best guess as to why that is there. So I did a few trades. Like I said, I did roll out that front week. I had like 2 short call spreads on. I did roll that out another week, and I did add 1 more short call spread. And then I sold a couple more put spreads, and I bought, I added to this condor a little bit here. But like I said, I like the position. I got to not mess with it. Just leave it. I hope you guys are doing okay. It's kind of not too exciting of a Monday so far. Not a whole lot of news out there. Let's take a quick look at barchart.com and see if we've got any interesting options activity that we want to maybe take a look at here. Highest implied volatility options. And I like to look at the higher priced ones, right? We don't really want to play with these NEOs. It's like a $2 stock type things that much. So we've got Roku, which we already talked about a little bit. Overstock.com is still up there. BYND. Let's see. Now, who did not think Riot was going to go to 0 at some point? I don't know. I'm not a huge crypto guy, and I knew that was going lower. AMNR. Let's take a look at AMRN. Let's take a look at that. American ADR. All right, let's look at the other category then, which is under options here, which is like high options volume, and see what's going on. Not most active, unusual. How about unusual activity? Then we can look at change in volatility after that. AMD, 130,000 contracts traded. That's a lot, huh? The 32 call expiring in a few days. So maybe someone thinks this AMD is going to go up. So 130,000 calls trade. Let's take a look at that. AMD. So if we go to our Analyze tab, we can pull up time and sales. And let's see, everything's cleared. Let's see, which call was that they were saying traded? It was the SEP 2732 call. So SEP 2732 call. Maybe that was like from the last session. Maybe that was from Friday's session. And it's just showing it now. That's likely. Sometimes those are like from Friday's session. If we look here, options chain, sub 27, volume, open interest. No, it's showing today. So somebody was into buying these SEP 32 calls, and it's definitely opening because if you look, this chart here is showing volume and then open interest. And open interest is less than volume, which means it's an opening trade. 130,000. That's a lot of contracts. Oh, thanks for the update. Wiki Blindside. You can hit the quantity tab. Thank you for the update. Hit the quantity tab. Wait, where's the quantity tab? You mean when I'm in time and sales? Oh, like that. Boom. I was just thinking that it would show, you know, it shows the top trades of the day and then it would show the size, but it looks like, I guess it's a bunch of smaller trades that put it together. Look, 50, 50, 50. It is. It's like 50, 40, 40, 40. For some reason, it's not picking up that big trade because even all these 20s can't add up to 130,000. So it's not showing the print here. So maybe it printed somewhere else. You know what I mean? 100, 100, 100, 100, 100. Yeah, it's weird. But either way, now do you think that's bullish? Yeah, right, it's that one, right? For quantity, yeah. That's cool. That's a good tip for people. So that kind of seems bullish to me because why would you be buying these to open unless you thought it was going to have some sort of news? That's a lot of freaking calls to buy. So here's the chart of AMD. And we'll just have to, why do I want price as a percentage? I keep switching that. We'll just have to see if that, what happens with this. But it looks bullish to me. Someone buying that many calls. Usually, like options trades, you don't know what something is. It's very hard to decipher a trade because you don't know if they're doing something against it, et cetera, blah 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 blah. And in a way, we don't know if somebody was overwriting. Maybe they bought a bunch of stock and sold calls against them. Maybe they owned the stock for a really long time and sold calls against it. You know, here it shows the market. It shows them selling them on the bid. But then the market here is 14.15. Yeah, it looks like they lowered the market a little bit. But I wonder where all those calls went up. It's hard to tell if it's on the bid or the offer. You know, these guys could have been just long a massive ton of this stock and they thought they'd just dump a bunch of calls against it. Or it could be somebody who just knows something and is willing to pay that like 15 or 16 cents to, you know, to make a bet to the upside. But definitely an interesting trade. Let's check out what other trades we have here today. That was a big one, I'll tell you. ADI buying 27,000 calls. Let's look at that for a second. So this would be analog devices, and they're JANs. So once again, we could go here, we could go here. Now we can clear this and just put JAN in. And we can play with this. And once again, it's not showing that big trade. Let's try something else. Let's try the change in percentage one on this one because I like this. Shorting vol here, like picking up pennies in front of a steamroller. I've heard that quote before. Welcome back, Amerimut. Well, that is what we are doing in a way. We're picking up pennies in front of a steamroller. And as long as the roller stays far enough behind us, it's okay. It will work out okay. Yeah, I mean, 1497 in the VIX. It's not exactly historically like completely in the basement. Market near all-time highs. We are in 7% contango, which is a nice thing to be in. And we move forward. You know, shorting volatility is like being an insurance salesman in the market. You sell, you collect money, you collect money, you collect money, and at some point there's going to be that hit that you take. And you know, your calculation is you're going to collect enough money to absorb that hit. That is the calculation that we are making here. As I continue with my search for something interesting in the market that's trading. Amazon. Okay, let's do change percent in volatility. That's a fun one. So increase. So BYND back into the increased volatility thing. Back. It's back. HPQ up to a 28 vol. That's a 700% increase. Up to 28 vol. That's pretty amazing. You know, some of these it's like, all right, now it's up to an 18 vol. Still, it's not going to be very exciting for most of us. Hi, what's up, Eric? Thanks for coming in. Yeah, so I don't know if this really is that interesting of a show because I don't have all that much to talk about today. So I don't want to bore you guys too much. Let's see, vol coming in Bank of America, vol coming in LKQ, down to 11 vol. Geez, that's kind of like nothingness. Well, let's pull up BYND just for the fun of it here. BYND was a great one where volatility was coming in for a while. And I finally remembered what I would like to talk about, which is Roku. Now, Roku, we were talking about before, but, you know, there may be some opportunities here to sell some stuff. And I was just looking before just at this, you know, selling out of the money calls. It seems like the event has happened. The bad news has come out. And this is gap down from 130 down to where we are today in the last couple days, and it's had sort of a dead cat bounce here, right? Just boop, it just went down and that's it. So my idea was maybe since vol is still kind of high, just kind of residually high after that move, maybe we sell something like, you know, maybe we sell some naked 117 calls, or maybe we package it together with some puts. Maybe we look at a strangle, like the SEP 117 calls and the 96 puts, something like that. Now, you know, you're playing with fire a little bit, but that's what we do out here is we take risk. Something like this, and you could pick a side. You could just maybe pick the call side if you think that, like, this is just really bad news for Roku. And my suspicion with something like this, and what generally happens is it's had all this action, and now it might just like nothing happens for a while. So you sell the strangle, you got 4 days to go, and you hang out. And if that the news is out and that event's over, probably it just hangs out for a while, and you can collect some money on this residual volatility. I was considering doing this, and I still am. That's an idea potentially for somebody. Let me give you all the disclaimers. First of all, I'm not licensed to give you advice. A. B. I don't know what your personal situation is, so I can't give blanket advice to people. Maybe you're a rich doctor who has losing $1 million wouldn't be that big of a deal because you got 10 more $1 million and you're willing to take a shot on something. Maybe you're like, the rest of us people who it's hard to earn $1 and you want to be pretty careful. But I don't know how much money you have and how much your risk tolerance is and all the other stuff. So I can't make recommendations for you. All I'm really doing here is showing you my thoughts and how my thought process goes, and what I look at and how I execute my own trades. You're going to have to come up with your own ideas, of course, and I try to give you like a little starting point. There's the other one I've been following for a while as CVNA, and you go in the chat and people are like, oh, this is going to 100. Other people say I've been short it forever and why it won't go down. Seems to be acting a little bit more quote unquote rational as of late. If you look at the chart for this, and that doesn't even really do it justice, but let's back it up even more. We've had here's a yearly. This shows you a little more. Let's go to the 3-year actually though. You see we got this big move up to 70, then boom, back down to 30. And this is kind of where I started following it. It's like right on this second move up, which is, am I in the way of it? No, I'm not. The second move up here. And because I was just flabbergasted by this stock. Look, it's lost money. If you look down here, every earnings, it's lost money. And yeah, it can go from 30 to 70, go back to 30, and then go back to 70 again. That is an amazing, just an amazing move. And I was kind of flabbergasted by it. I shorted it actually a little bit here, right here. It started to go against me by $1 or $2, and I'm like, I'm out. I just don't understand this issue. I'm not going to mess with it. Then on this latest move, it got up to 80, and I sold a couple of the 80 calls. I messed around with it a little bit, and I ended up I either scratched them or I lost a teeny bit of money on them. But it kind of looks like it might have tired out for the time being up here around 85, and we've got the the $11 down move back to 74. But this is a monster of a stock that it's kind of almost, not that it's anything to do with the company, but it's kind of like a monster as Tesla is, and that it can just move on you. And you got to be really careful if you're trading this one, especially to the short side. Speaking of that monster, let's take a look at Tesla here today. Back to a sort of range-bound type thing, right? This thing was in this range here for a couple years, and it finally broke down to the downside. And it's made a good try to get back up in that range though as of late. Once again, a monster stock to trade. I would have to think some people did get hurt on this down move here because people were selling puts thinking that this was going to stay in this range. And people made a lot of money doing that for a long time. It finally dropped out of that range, though. But definitely a monster of a stock. I've looked at doing some sort of calendar-y stuff in this one as well, calendar spreads and whatnot. Just because it was so predictable at coming back. I mean, if we were just to look at maybe buying maybe Nove 250s, and selling some closer month 250s against it. This is sort of kind of short a straddly type thing when you buy this calendar spreads. Let's see if you've paid. So you're paying $10. Paying $10 for each of these spreads, and what's it doing for you? Let's see. So collect $14 a day. So you do $10,000 worth of it. You collect $139 a day. It's showing you long 84 deltas here, but that's just because we are a little bit below that 50 strike. But I would think it would be reasonable that this could move up through 50 and hang around that 50 strike for a while. And you put 10 grand to work here. shows collecting 140 a day, but the but here is it kind of has to stay in range here. If it starts puking to the downside, then this isn't going to work very well. The other thing is when you do a trade like this, you are long some Vega. So if you do get the move down and volatility pops, that's going to offset some of your delta issues here. But this is a risky stock to trade, no doubt. The other thing that a lot of people do in like a Tesla is just straight out just sell out of the money puts, maybe if we look out to like next week. And it depends on how like risk adverse you are or whatever. But, you could look to sell, I don't know, the 220 put naked. That gives you, $14. Sell this and hang out, see what happens. If you were more risk adverse, you could maybe go out to like October expiration. You pick something farther out of the money, like, the 200 put or the 190 put. Sell the 190 put. You hang out. You got 25 days. Put a bid in. Put a 25-cent bid in. See what happens. Maybe the stock pops and you get filled to take those off in a couple days. Something like that. Yeah. Collect a little primo. And I would say same with like Roku is you're in the same boat here. You got that stuff's cranked up from that big move. Take advantage. So, and remember, you can get twice the bang for the buck on your buying power if when you do sell one of those puts down there. This is only 4 days to go, that 95 put. You get twice the bang for your buck if you go ahead and you sell an out of the money call as well. And maybe you pick something that's real risk adverse. Maybe you go all the way up to like the 125. I don't like to sell stuff for less than like 50 cents because it's giving up too much. Every time you sell a call, you're giving up the control of 100 shares, and you don't want to do that for no reason. So I have a buddy who will sit there and he'll sell these calls for 11 cents all day, and he makes millions of dollars doing it. He's really good at it, and God bless him. But for me, that's not the kind of risk I'm interested in taking. In this scenario here, I would probably look to something like the 115 call. Try to find like a $2 call that's got some meat on the bones, maybe some risk attached to it, but meat on the bones, and play with that. The other thing is if you don't want to take as much risk, you could sell a call spread, sell the 116.20 call spread, right? And then turn it into a condor, then sell the 195 put spread. Then you've got a condor on, you know how much you can lose, but you're still taking advantage of some of that juicy Roku premium. And there's other stocks out there that are similar that can let you do the same thing. I play with Amazon a little bit, but for me, in my mind, it's just really hard for me to judge how much Amazon's going to move per day. It looks really juicy because it's such a high-priced stock, but then the thing moves like $50 in a day on like no news, and you get blown to pieces. So if you're going to trade an Amazon or a Google, I would watch it for a while before you jump in on that one because it can be tough. And if you're going to start trading stuff that's got these like high prices like this, why not just jump right into like the one of the ETFs or, the SPY or the SPX or something like that. Or the SPY or IWM or something like that. Maybe we'll look at some ETF options trades moving forward. All right, so there you have it. There's a little info. Came on for a little while today. I didn't get on at 9 o'clock. I apologize. But it kind of looks like nothing's really going on. I hope if you are short those UVXY calls that they're working for you today. We've got a nice little down move. This is one of those days between where you get a little down move in UVXY and stuff. Nobody really notices, but the short vol people are making money or making money back or, collecting. Nothing's really going on, and we like it that way. So let's leave you with a look at UVXY on the daily. I'll get my mug out of the shot. Calm before the storm. I like this fear tactics in Miramut. I like it because we always want to be ready for that spike that could come and could certainly be the calm before the storm. A spike could happen at any time, but if that happens, so be it. That's the world we live in. Let's entice some buyers to come in and buy those juicy calls, crank up the volatility in UVXY, and then we'll say here, and then we'll do like this. We'll be like, sell you a couple, sell you a couple, sold, sell you a couple, sold, sell you a couple calls, crank it up to like 28. We'll sell a couple calls and hang out. There you have it. Thanks for watching, and we'll see you in the next one. I'm getting it together. I am going to make it so that these comments stay on the screen for more than like 10 seconds. Thank you. They come up there for like 10 seconds on the other side there, and they disappear. I know you guys can see them in our chat there, but everybody else can't really see it. It's kind of weird. Thumbs up. Oh, got a nice. I like your little seems good thing. Very cool. All right, folks. Thanks for watching. See you in the next one.